Other beautiful sets
Yes.
that you have set up here, because Lauren, of course, you do retiring today, your own television show, so you have a beautiful setup here to help educate and share information. So why don't you, Lauren, kind of introduce us to Jeff and kind of talk about what he does here as part of your team.
Tax planning is one of the most underserved components of the retirement plan. This is why we're spending so much time talking about tax planning. And what we talk about is it's not about what you make. It's about what you get to keep. It's about what you get to spend in retirement. And one of the ways you can effectively increase what you get to spend is by decreasing what you have to send to Uncle Sam. And there's just not a lot of professionals out there who engage actively in tax planning. And that's why Jeff, a lot of our families choose to work with Jeff and the Vroman Group, because one of the few professionals I know that is incredibly intelligent and engaged in tax planning. So that's why I lean on Jeff a lot when it comes time to implement effective tax planning strategies, and so do our families a lot of times.
That's wonderful. Jeff, thank you so much for being here on Iowa Live this morning here in this beautiful space. Okay, so when people say, hey, let's talk about taxes, not everyone gets excited and said, yes, let's do this, but it is that important when it comes to your retirement plan.
It is, and most people will sit there and they'll groan and gripe and say, I don't want to come in, I don't want to do it, here's my information, just please give me what I need and let me send everything on to the government and then I'm done for a year. Quite frankly, that is probably the worst thing that you can possibly do.
It is.
Tax planning really is. It's a year-round we have to do it year-round, or otherwise we're not serving those people that we're looking at, and especially when it comes to the other advisors as well. One of the biggest things that we see is that most people will see their financial advisor as an independent island. They'll see their tax person as an independent island. Everybody needs to be on the same page. Everybody needs to be talking together. Everybody needs to know what that plan is. So as Lauren goes through and he develops a plan for those clients, and then we take a look at them and go through, we're saying, okay, Lauren wants to get them here, and this is the financial aspect of them being able to spend, etc. How do we get them there in the most tax advantageous way? So we're really trying to put all that together so that we have an opportunity for people to maximize what they have. I will diverge a little bit on something that Lauren said. Sometimes it's not minimizing what you pay every year. And that's one of the traps that everybody falls into with tax planning. They say our job is to minimize your taxes every year. No, our job is to maximize the cash that you put into your pocket, not just that one year, but over your lifetime. And part of that may involve actually paying more taxes than you would, quote unquote, have to, because it's an effective tax rate. It's a very advantageous rate to you now. Very important for things like one-time events, or especially at retirement planning time, when your sources of income change, when your sources of expenses are going to change. You should be in and you should be seeing your CPA and your financial advisor sometimes in the same room at the same time, a couple times a year. At least.
I'm glad you brought this up. So what are some other pitfalls or mistakes people are making when it comes to taxes? Is it that we're not seeing it as a team?
We're not seeing it as a team. I think that's one of the most important things that you have to look at. We're viewing it as a situation where if you tell me to pay more than I think I should, you haven't done your job. It is education. It really is making people understand that this is not a one-year deal. I tell a lot of people, you want me to be a one-year hero to you? I can do it every day of the week. You're not going to like me very much next year. In fact, you're probably going to hate me. It is a multi-year discipline. You have to look 5 years. You have to look 10 years. You have to look 20 years. It goes hand in hand when people start talking about estate planning. What are your goals? What do you want to do? Is it to live comfortably in retirement? Is it to leave a legacy? If you're charitable, what are what donations do you want to make? What's your charitable purpose? What do you want to leave behind in life? Is it to leave a pile of money to your heirs? We don't know. But all those things are going to be part of it, and that's only just a snippet. I mean, obviously, everybody's going to have a different goal. They're going to have something different they want to see in their life, and we have to make sure that we get them there. And part of that is working with Lauren, even working with your insurance agent, even working with a banker if you're talking about financing. That's all part of that team, and everybody has to be on the same
Jeff,
page.
I think you hit it the nail on the head. It's about the education, and that's what this new space is all about, is providing people that education, right, Lauren?
That's exactly it. And one of the biggest mistakes that I see is people just think about tax planning once a year, which is when they file taxes. If you're just filing taxes, that's all you do, essentially what you're doing is you're recording your tax history. You're recording what took place last year in your tax environment, and if that's all we're doing, there's very little that anybody can do to positively affect what it is you pay for taxes. That's why these conversations need to be a year-long conversation. It can't be just a February, March, April type thought process. Otherwise, you're probably leaving a lot on the table.
But it sounds like a lot of us make that mistake of we're just so focused on keeping those taxes reduced right now, and that could hurt us in the future.
It can. It can. It's very important that at an absolute minimum you talk to somebody before the end of the year. Go in, review situations, take a look at what's going on. What are things that you can do? We always say that the IRS gave us the best planning tool in the world, and that's very simple. If it happens between January 1 and December 31st, it's current year. If it happens January 1 to December 31st the next year, it's next year. And it sounds ridiculous to sit there and say that, but that timing tool in and of itself is one of the biggest issues that people miss out on.
Yeah.
It is very common to have somebody come in, as Lauren said, February, March, oh, by the way, this happened. And you just kind of drop your head because, well, if you called me when it happened in March, or if you called me when it happened in June, we could have discussed it with the other advisors. We could have gone through and said, well, are there some strategies we can employ? And those strategies, I'm not going to say are endless, because there's not. There's a finite number of things that we can do. But we can only do those if they fall within certain gaps.
And they need to go along with that education that you're talking about. We don't want to give the whole farm away this morning. You need to be a part of what's happening here. It's putting that perfect team in place. You have the retirement that you are dreaming of. Okay, more from Merkle Retirement Planning. Jeff, thank you so much for joining us today.
Thank you.
I'm intrigued and now know I need to do some things differently. I'm going to be a part of this team. We hope you can stick with us. You're watching Iowa Live this morning. We'll be right back.